Good morning and welcome back to Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. And joining me live at MarketSite is Kevin McPartland. He's the head of market structure research at Greenwich Associates. And we're going to focus on embracing the change of bond trading. Kevin, thank you as always for joining me at MarketSite. So I'm just going to let you run with this. What are some of the trends that you're seeing now?
Sure. So I think the big thing that everybody's paying attention to is the growth in electronic trading in the bond market for government bonds, for corporate bonds, both. It's thought of as a market that is very much old-fashioned.
Right. It's
a lot of phone conversations. There's still a lot of that, let's be fair. But the growth has been pretty fascinating to watch. About half of government bond trading by investment managers is done now electronically, which is up from maybe less than a third only 5 or 6 years ago. In the corporate bond market, it's about 20% of volume, which was really, especially if we look at the high yield market, was almost non-existent just a couple of years ago. So there's been a tremendous amount of innovation. And I think what's even more interesting is the big banks who you would think are historically threatened by electronic trading. They feel that they're being disintermediated. They're really accepting and embracing the new technology as an opportunity for them to better service their clients, to extend their reach. So it's really moving forward, and I think that the banks being excited about it is a real catalyst.
I mean, they almost have to, if that's the way that the industry is going.
Yeah, well, I mean, they have to respond to their clients,
Right.
And their clients want better execution, faster execution. They want to be able to track who they're paying, what they're paying, be able to show that they're getting the best price. And the big asset managers have their clients, the big sovereign wealth funds and the pension funds, coming to them and saying, okay, are you doing the right thing with my money? Are you sure that you're using the fees that I'm paying you to get me the best price and get me the best returns for my investment?
Do you think it's going to continue to grow electronically, or it's plateaued at this point? Where do you see the next years?
It will. I mean, there's still some more growth there. I think there's some nuance in what electronic trading in bonds means. When we think electronic trading, you always tend to think equities markets, right? We're at Nasdaq. It's super high speed. It's very, very electronic. It's very algo-driven. The bond market is still a little bit slower. A lot of what goes on today is essentially the negotiations that used to happen over the phone. That process has been automated and electronified. It's not a market where a single instrument trades over and over and over again very, very fast. If you think about, there's one IBM stock, there could be 50 IBM corporate bonds, right? So the chance of having a buyer and a seller at the same size that can agree on a price at any moment in time, that's harder to come by, right? So the dynamics of the market are just
so the larger trades, like the massive block trades, are they still being done desk to desk?
Yeah, so the biggest trades, the most customized and complex trades, the more illiquid bonds are being done over the phone for sure. But the average trade size done electronically is slowly growing, right? It was, a couple of years ago was thought of as trades that are a couple $100,000 in notional were traded electronically. That was it. Now we're definitely over the $1 million mark, where there's a good amount of trades, $1, $2, $3 million that are being executed electronically.
It makes you wonder if machine learning and AI is going to change that, because if it learns trader behavior, that could also lead to more electronic trading as well.
Yeah, well, that's another interesting development with the big platforms involved in bond trading, is that rather than selling their services now, talking about how the trading protocols work and some of those details, they're talking a lot more about the data they generate, the analytics they provide their clients, and we can help you understand the market better. What should this bond be worth? What are other people doing? What's the history look like? So when both the buy side, who's looking to make their investment, or the sell side is looking to provide liquidity, they can have a much better feel before they go into the market from that data than they would have otherwise. And it's not, I shouldn't say it's simple in equities, but in equities the market is centralized. There's a central tape. You can know what the last price was. In the bond market, the bond maybe hasn't traded for a year. How do you know what it's worth? And that's where these analytics, and you said machine learning and such, really can come in and are coming into play now.
It's like the industry is moving just to data management. I wouldn't say just to data management, but it plays such a huge role.
It's a huge role. I mean, Wall Street's always been an information business. There's no question. Today, there's just so much information, right? It's a crazy statistic how much data the world generates every day, and trying to understand the best ways to utilize it, to make sense of it. One of the other things we do a lot of research on is the use of alternative data in investing, right? So social media is the obvious one, but it goes way beyond that into Internet of Things, private company information. There's a whole host of things. It's not that hard to get that data anymore. It's very hard to figure out how to use it, and really what's the opportunity in that big, often unstructured data set.
All right, and that's why we have you guys from Greenwich Associates coming in to tell me all about that. Thank you very much, as always, for joining me at MarketSite Traders. Thank you. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.